right, I think we'll get started. Thanks everyone for joining us today. My name is Sarah Parker. I'm a Senior Director at the Financial Health Network. And today we wanted to have a conversation around integrating financial wellness into the insurance industry. This event is somewhat connected to the Insuretech Connect Virtual Conference that is launching later on this afternoon, but we also opened it up to others that aren't participating in that conference specifically. So today, what we'd like to share over the next hour, there we go, do a quick welcome. We'd like to take some time to introduce our company and the Financial Health Network, and then move quickly to our understanding of financial health, how we think about it, how we measure it, some research we've done around it, and how that relates to insurance. Then we've invited a couple partners from Prudential and from an Insuretech called Resilient to share how they have integrated financial health and well-being into their company. Then we'd love to share some resources and then have some discussion with all of you around your questions, comments, thoughts around this topic. All right, so to get us started, we thought it would be helpful to just understand who's in the room. So a poll should pop up for you, and if you can just select the institution or organization that best describes the one where you're coming from. All right. So big representation from nonprofits. That's interesting. Some incumbents and some insurtechs, some of the intermediaries, good representation also from financial institutions and fintechs. Great. So that gives us a good idea of who's at least logged in so far. So a little bit about us. The Financial Health Network is a nonprofit organization. We've been around for about 15, 16 years. We're headquartered in Chicago, but we have some offices in New York and DC. I'm based in our Washington, DC office, although we're all working remotely right now, of course. We have about 60 staff, just to give you an idea of size. And our mission is really to improve the financial health of Americans. And we do that in a number of ways. So if we go to the next slide. We do this in a number of different ways. First, we do a lot of public research on lots of different topics, from savings, credit, insurance, retirement, fintech and innovation, policy, etc. Much of that research is available publicly on our website. We have developed a lot of measurement tools around financial health measurement, and we'll talk more about that later on. We do consulting, proprietary consulting for companies who are interested in integrating financial health into their business practices, into their products and services, and how to better engage with their customers. In terms of innovation, we run an innovation lab that we'll talk about a little bit later, where we invest in startups that are testing new innovations. And our next challenge will have some focus on resilience, so we'll talk about that. And then kind of bringing it all together, and you can go to the next slide, is our network membership. So we lead a network of over 160 organizations who want to work on financial health and integrate it into their business. So this ranges from the large banks to regional and community banks, credit unions, fintech companies, insurance companies, payment providers, a lot of nonprofit providers as well. And we're increasingly bringing in healthcare providers, employers, as we think about the financial health of one's employees. So we kind of pull this all together in our network membership, and a way to bring like-minded companies together. But just in terms of a little background on our organization, we started around 15 or 16 years ago, really focused on the un- and underbanked and how to encourage the financial services industry to focus on the un- and underbanked as a viable customer segment. And Over time, this has changed to recognizing, well, most people are banked, but they may be underserved or poorly served by their financial institution. So how can we work with industry to really meet the needs of their customers? And about 5 or 6 years ago, we pivoted a bit to this concept of financial health, really thinking about what are the ultimate outcomes that we're working towards? What do we want the financial industry to focus on among its many other KPIs? And for us, it really did come down to the financial well-being of their customers. And so that became an explicit focus of our work, and we rebranded ourselves to really be focused on that. So before we kind of dive into more of the specifics, let's just take a step back and we can go to the next slide and talk a little bit about what we mean by financial health, and more specifically, how do we measure it. So next slide gives the definition that we use. Financial health comes about when your daily systems help you build resilience and pursue opportunity. So here there are, the three main components of financial health, meaning your day-to-day systems, building resilience to shocks, and being able to pursue opportunity. And when we began our work a couple decades ago, we were really focused more on the retail banking industry. But as we began to use this definition of financial health more, that resilience to shocks became really important, and we recognized that insurance is a pretty unique and critical tool to build resilience. There are some shocks against which it's very difficult to self-insure. You really need an insurance product in place. And so about 3 or 4, maybe 5 years ago now, we started getting more involved in the insurance industry. I've been leading that work for the company over the last several years, because while, of course, insurance and financial services overlaps, they're also quite distinct. And so we wanted to understand where is the industry at when it thinks about building the resilience of its customers, ways to do that. And that's really been the work that we've been doing over the last several years. If you go to the next slide. Now, this definition of financial health is great. It sounds nice, but it's very high level and it's not very actionable. So we developed this framework of financial health, really trying to break it down and make it much more concrete and actionable for financial institutions. And so we identified these 4 components of one's financial health: how you spend, save, borrow, and plan. And then under each of these components, we have these 2 indicators that would indicate that someone is financially healthy. For spend, do you spend less than income? Do you pay your bills on time? For borrow, for example, do you have a manageable debt load? What's your credit score? And you'll see indicator 7 under the plan category is specifically around having appropriate insurance. And so this is really a critical part of our financial health framework. We were apprehensive to put in specific products per se. So for example, for long-term savings, we didn't say, if you're under a certain age, you should be saving long-term in a Roth IRA. We were trying to be pretty product agnostic. But when it came to insurance, we needed to be specific that you do need to have appropriate insurance to protect yourself against certain shocks. So the next slide goes into a little bit more detail around then what we did with this framework. We built what we call the FinHealth Score Toolkit. And this is a very specific and actionable way to actually measure someone's financial health. It has 3 components. The first is a survey guide. So we took those 8 indicators and we have a survey question that correlates to that. Then we have a scoring logic based on people's multiple choice answers to those questions. And then we have benchmarks. So you can compare yourself or your customers or your employees' financial health to national or even regional benchmarks. And this score is publicly available on our website. You can see the link there that will take you specifically to that toolkit. Going to the next slide. So then what do we do with this score? So the score is on a range of 100, and we've identified 3 tiers. Someone who has a score of 39 or below, we characterize as financially vulnerable. Someone with scores between 40 and 79 are financially coping. And then people who have scores of 80 or above are financially healthy. And so this is the way that we have categorized financial health out of a score of 100. Okay, if you go to the next slide. Um, so we have a whole, like I said, methodology, a score toolkit that's available to begin to measure. And we also have many members of our network who are actively measuring the financial health, either of their customers or their employees. And the reasons why we think this is important, and we actually really encourage our members to do this, is for some of the reasons here on this screen. If we take a step back for a second, clearly it makes sense that what's measured matters, that what gets tracked on a monthly or quarterly basis is what people turn their attention to. And so adding financial health as one of many KPIs that a company tracks, we think is both good for business and also good for your customers. But specifically here, we think that measurement can really be leveraged to inform product development, to evaluate the financial health impact of one's products and programs, and then of course to engage with customers on a deeper level. So these are all reasons why we think measurement is important. And next, what I'd like to share is some of the measurement we've done on a national level, some of the recent insights around financial health in America, and then would love to hear some of your comments and questions as you react to the information that I'm sharing with you. So feel free to put any of your questions in the chat now. We'll turn to that in a few slides. And we'd love to get your feedback on this. So the U.S. Financial Health Pulse is an annual research study that we do that provides an ongoing snapshot of the financial health of people in America. You can go to the next slide. And it's really meant to use our methodology and measure the financial health of Americans. And so the information here is from the latest data from 2020. This is a longitudinal survey, meaning we go back to the same panel every year so we can track changes over time among the same participants. We started this in 2018, so we're now in our third year of 2020, so we're able to compare to the previous 2 years. And so this is the data from the research. We actually just released this last week. We fielded the survey in April, and then we did it again in August to try and capture some of the effects of COVID. And so from this year's survey, what we found is that 33% of Americans are financially healthy. So again, we used our methodology and framework where we had those 8 questions. We asked those 8 questions. We asked a lot more, but we used those 8 questions to then score people's financial health out of 100. We find that 50% are financially coping, and then about 17% are financially vulnerable. If you go to the next slide, we break that down a little bit more. This is by decile, just the national distribution of financial health scores that you can see there. And then the next slide shows the averages by component. So the average financial health score for Americans is 65. And then you can see the various scores by spend, save, borrow, plan. And what's interesting is that plan, which is where the insurance indicator is the lowest of the 4. If you go to the next slide. Now, something that we hear a lot about our idea around financial health is that, is it just a proxy for income? And certainly while income and financial health are very correlated, we actually find that there are other factors, other behaviors that are much more predictive of financial health. So here, this data again comes from our latest research from this year's survey. It shows that 17% of people with incomes less than $60,000 are financially healthy. And the flip side is almost 40% of people who have incomes of $100,000 or more are financially coping or vulnerable. So again, certainly income is related to financial health. We see that again and again in our research, no doubt. But it is interesting to see that it's not just income. There's lots of other factors that influence financial health. In fact, from some past research, we found that 2 of the behaviors that are actually more predictive of financial health are your planning behavior, how much you plan ahead for the future, and then your savings behavior, saving for specifically saving for unexpected events. So this is just a little bit insight into the correlation between the 2. Yeah, you can go to the next slide. So like I said, this is the 3rd year that we have done this study, so we can now compare financial health nationally from 2018. And interestingly, you'll see there wasn't a huge change between 2018 and 2019. The percentage of Americans who are financially healthy seemed to increase several percentage points in 2020. That vulnerable group has really stayed constant at 17%, but the coping and healthy has changed a little bit, which is somewhat surprising in light of all of the recent events of 2020 with COVID. And there's a few theories that we have that may explain this. One could be the stimulus payments that people received. Another could be unemployment insurance that people received who lost their jobs for a significant amount of time. Again, the last time we surveyed was in August, so it'll be interesting to see if this changes and drops off as as the insurance payments go back to the normal amount without the added boost. And then also we know that a lot of financial institutions provided debt relief to their customers, for mortgages and other things. So that may also be an indication of this. Again, it will be interesting to see if these numbers hold constant in 2021. We field our survey annually around April. And so we'll see what the effects are and what that looks like when we field it next April. I see some great questions coming in the chat. Thank you so much. Keep them coming. We have a couple more slides in this section just to share some of the latest insights, and then we'll be able to turn to that. So this next slide shows specifically the changes from 2019 to 2020. And you'll see that there were actually improvements across nearly all of the financial health indicators, except, interestingly enough, number 7, appropriate insurance. That went down about 7 percentage points from 2019 to 2020. Now, the way we ask this question, we ask about confidence. How confident are you that the insurance policies you have in place will protect you in case of an emergency? And so there's several reasons why this could have gone down. It could be that people are specifically thinking about health insurance, perhaps related to COVID. It could be related to other things happening that may be a result of COVID. We did in the 2020 survey break down the various insurance lines. So how confident are you in your life insurance, in your homeowners, in your auto, et cetera, et cetera. So we'll be able to dig in a little bit more, health included, dig in a little bit more to see what may be driving this decrease. But it is interesting to note that all the other indicators went up while this one went down. And the next slide just pulls from some research that we have done previously that showed something very similar. This is research we did in 2018, where we looked at different income levels and how people perceive their insurance coverage. And what we found was that kind of across the income spectrum, people were quite unsure if they were adequately covered by their policies. Again, this lumps together all different kinds of policies. We break it out in other types of, in subsequent research that we've done. But we did really find that certainly people are more uncertain at lesser income levels, but we do find that even those with higher incomes, there is a degree of uncertainty in whether their coverage is sufficient. So this just gets back to, I think, a trend that we've seen a lot around kind of that peace of mind that people are really looking for from their insurance policies. The next slide just kind of summarizes this research. Like I said, the 2020 trends report from our U.S. Financial Health Pulse report just came out last week. You can access it at that website there. These were the key findings. The first two we've talked about how it has improved a bit since 2019, but we're uncertain if those improvements will be temporary. Even still, majority of people in America are actually in that coping segment right in the middle. I didn't share the data here in this deck, but it's certainly in the report around financial health disparities that we've seen widen by race and income and persisting across gender. And then we also saw that Black Americans, people with lower incomes, and women are really bearing the brunt of the COVID-19 crisis. So we invite you to go and access this research, and I will share a little bit later on a public webinar that we're doing that will dive into the research in more detail. So let me pause there. I know I threw a lot of information at you. And again, what the intent here is to really introduce you to the way we think about financial health or well-being. And I kind of use those terms interchangeably a bit because I know that different industries kind of use different terms. So to introduce you to how we define it, how we measure it, and why we think it's important, and then some of the national research that we have done to kind of show where Americans are at. One thing that I mentioned just in passing, but do want to mention again, is that we have several of our members, I think close to like 50 of our members in our network, who we call financial health leaders, who are actually, actively measuring the financial health of either their customers, a segment of their customers, or their employees. And so we do see companies really taking this work in and making it very actionable for their own business. And so happy to share more about what those leaders are doing in the Q&A, and we have lots of resources about that. But let me pause and just open up the chat and see if we can answer some of these questions. And please continue to add them in. So let's see here. So how many people are surveyed annually? It's about 5,000 people or so, between 5,000 and 6,000 that are surveyed as part of the annual Pulse panel. And again, it's longitudinal, so we go back to the same people each year so that we can see if people go up or down in their own individual financial health scores. You have a couple questions around healthcare costs. So how much do healthcare costs impact people's sense of financial health, student loan debt, general household expenses? So certainly, and then another question around how much would being financially healthy be impacted by universal health options? That's a very relevant and pertinent question. I think that just so going back to kind of differences by age, so certainly we have a lot of data from the survey. We can cut the data by age, we can cut the data by lots of different demographics. And certainly, yes, we see student loan debt really burdening people. And sometimes you think it's just the young people, but actually student loan debt kind of continues on into middle age, unfortunately. And so it can be a huge burden on someone's financial health when they are trying to save for the future. They're also trying to pay off high cost debt. So that's certainly an issue. And then healthcare costs. I think we have some questions in this survey around that, but from some of our other research we've done, we've definitely seen that the most common financial shock that kind of pulls somebody under is a health shock. It's a health shock where maybe their insurance, maybe they don't have insurance, or maybe it doesn't adequately cover, or maybe even the deductible's too much. But for sure, we have seen in research we've done that health shocks are the most significant and the most impactful in terms of someone's progress towards financial health. Let me just look here again. Yeah, another question around the impact of the difficulty in understanding insurance documents and terminology. I think this is something that's come up a lot in discussions we've had with the insurance industry related to COVID, where people are really interested in, and they have kind of this newfound appreciation for things like life insurance and other products and protection. And so they're really demanding simplicity in how they're able to purchase, be underwritten, and understand those products. So I think that's something I'd love to hear from you all about how you've thought about that in your own business. But we hear that a lot, that there's a need for some simplicity when it comes to how insurance is delivered. Let's see. Are you aware of any CDFIs involved in offering insurance? Yeah, I think there's, and we're actually, one of our speakers in a little bit works a lot with financial institutions to try and bundle insurance into what banks, credit unions, CDFIs are offering, and how to also bundle it into other products and services that customers use. So can definitely kind of think about that a little bit more when we speak to him. Yeah, so great question around how companies can accurately measure financial health when people have, lots of accounts in lots of different places. And the trend of kind of banking with one institution is really not the case anymore. So yeah, that's absolutely a good question, and one that we talk a lot about with our members who are actively measuring. And so at a high level, I would say that we encourage companies to kind of measure financial health holistically, knowing that in some ways they only have control over certain aspects of a customer's financial life. It may just be that they offer insurance products. And so as they think about the adequacy of one's insurance coverage, that's what they can control. So in some ways, lots of different people in someone's financial life and lots of different organizations have different spheres of influence. And so while we think it's helpful to still have a holistic picture of a customer's financial health, we recognize that one company can really only do so much in terms of impacting that, but it's still an important perspective to have. These are great questions. Thank you so much for that. You can definitely keep them coming. I want to move next, since we're already about halfway through our time, to just some Q&A with a few of our partners. So we have on the line Sarah K from Prudential, and then we're going to talk to Maximilian Weiner from Resilient. But let's start with you, Sarah. Thank you so much for your time. We just wanted a chance, and we're just taking off the slides for right now. We thought it would be helpful to kind of hear from a couple of companies that we work with directly around ways you've integrated this type of thinking into your work. And especially coming from a large company, I know that would be of a lot of interest to the audience. So can you just do a quick introduction of who you are, the role you play at Prudential, and then we'll go from there.
Sure. Thank you for having me. My name is Sarah Kay, and I work in the Inclusive Solutions Department at Prudential. And essentially, we like to say that we are the purpose engine of the company, of really helping the company understand and leverage all of its employee talents, skill sets, and assets that the businesses have to be able to improve the financial health and ensure that everyone has the opportunity to achieve financial security. I personally oversee our strategic philanthropy, our skills-based volunteering programs, and our shared value partnerships. And we really have a focus on how do we create an inclusive economy that provides shared prosperity for all, looking at it from multiple avenues of skills-based and job training programs to the quality of jobs to ensuring that people have access to responsible financial products and tools to build their wealth and protect their assets. And then also thinking about how do we make sure that cities across the country are using data in an equitable way to think about the decisions that they're making around services they're providing their residents across the neighborhoods.
Great. Yeah, thanks. So can you talk specifically around ways that Prudential has begun to integrate this concept of financial well-being, financial health into some of your products, your services, your philanthropy? I think there's a number of interesting initiatives, not surprisingly given the size of the company, but if you could speak to just a few of them, I think that would be helpful to kind of make this idea a little bit more concrete and how a company thinks about it.
Sure. I like to start with the founding story of the company, which was Prudential was founded 145 years ago by a gentleman named John Dryden because he saw that there was a big financial need out there in the community, that people from working class families didn't have the financial means to bury their loved ones. And so our first product was burial insurance, and it cost as little as 5 cents a week at the time. But with that product, he created an inclusive marketplace that allowed working class families to be able to save and bury their loved ones later on. And so that's in the DNA of the company, of really thinking through how do we ensure that everyone has the opportunity to achieve financial security, and what are the products and tools and resources that we can provide that builds to that. As a company, we are a financial services company, so we provide life insurance products, disability, retirement, annuities, and really thinking through short-term and long-term savings products. We know that employees, more than half of employees, are stressed in the workplace because of some kind of financial challenge that they're dealing with, whether it's a short-term or long-term challenge. And that decreases employee productivity. It decreases employer morale and culture, and really being stressed about it. And we know because of this pandemic, we also did a financial wellness census study recently that was done in May of this year, that more than half of the people surveyed said that their income was significantly impacted by COVID-19. And actually, 1 in 5 families said that their income levels dropped by half because of COVID-19. So the overall financial well-being of American people are just at an all-time low right now because of the economic, racial injustice, all of the crises and pandemics that we are currently facing. At the same time, we're thinking about how do we help people really understand the connection with short-term and long-term savings, because I think it's incredibly important to have emergency savings available, because you need, in times of crises when nobody expected a global health pandemic to occur, you need the ability to draw. But also thinking about long-term savings and making sure that your family for future generations has the savings and has the dollars to be able to put a down payment on a home, pay for your child's tuition, save for your own retirement. I think what's worrisome throughout the years that we've done the financial wellness census is millennials. I think more than 70% of millennials don't believe that they'll be able to retire comfortably. And so there are so many juxtapositions right now with what we're facing with the need for short-term savings, but also the fact that there are long-term savings issue that we firmly believe in with life insurance products and retirement and annuities that seem to be out of grasp for most people. And so for us, financial wellness, we see it very similar to you all in 3 ways of being able to budget and pay for your day-to-day expenses, meeting your financial goals, but then also being able to withstand financial shocks and emergencies in the future. And so with every product that we've created, it's thinking about it from that holistic perspective of how do we make sure that, people can afford to, buy a life insurance product and retirement product from us, but then how do we add partners or actual advancements to or enhancements to our product? So with our retirement product, we have added a sidecar savings account that people can pull dollars from without receiving the penalties that they normally do of pulling from a retirement account. And obviously that's been critical right now. Thinking about life insurance, I know a lot of people, think of the here and now, whereas retirement, they can kind of understand because that's for, when they retire post 65. Life insurance is a little bit harder for people to, say that this is an important savings product for them. And so we really have to think about how do we better market these products to really think about for your children, for your family members, and for next generations. How do you think about it in terms of providing that extra safety net for your family members and others? And so really thinking about it holistically from every perspective.
Yeah, great. So, Prudential's in an interesting position in the market because you largely work through the workplace and through group insurance plans. And so in that sense, you're kind of one step away from the end customer directly. How do you think about that when you really are trying to work towards the financial wellness and well-being of those end customers, but you're a little distant just given the kind of distribution models that the insurance industry tends to have? It sounds like you've been able to still kind of influence those companies you work with in the products that they're able to offer their employees, but just maybe talk a little bit about that approach in terms of kind of the group insurance model.
Yeah, so we are a workplace provider through our group insurance and our retirement products. And I'll say that in all transparency, we are in a moment of transformation for our company. We have largely been a B2B model, and we are trying to move more to a B2C model. And that's just simply because of macroeconomics and the way the society is changing is everybody really needs to better understand the consumer and really understand what their needs are. And largely for our 100+ year history, we've been focused on what are the employer needs. And so it's been a unique partnership in where we feel like we have some insights, like through partners like you all and others, of saying, do you truly understand what are the financial challenges of your employees? I think employers sometimes think they do, but if you're not surveying your employees, you're not helping them better understand, like financial coaching is such an important resource for employees, that you're not going to truly understand that. And so we've provided this financial wellness platform for our employer clients to give access to their employees to really help them start thinking about these questions. Like, do you operate on a paycheck to paycheck? Do you have savings? We know 60% of Americans don't have $600 in emergency savings. And so that's just a known fact that we have out there. And so how do we help our employers better understand the connection between serving the needs of employees during moments of crisis, but also during moments of when things are more steady? And in this last financial wellness census that we did, we saw that 17% lost employer contributions to retirement plans, 14% lost health insurance, 10% lost group life insurance plans through their employers. So employers are taking some also drastic steps to help mitigate some of the impacts that they're facing. And so it's really helping our employer clients move along this spectrum of not only thinking about it from a holistic organizational level, but getting to the needs of the individual employees, because we do see the tie-in to health benefits, financial benefits, but also productivity benefits that help alleviate some of the stress that's existing through many of their employees.
Great. Yeah, that's interesting. So maybe last question, and before we move on to Max, and if people have specific questions for Sarah, please do put it in the chat. So can you talk a little bit about ways that we've worked together? So Prudential's been a great partner of ours over the years. And when I introduce our organizations to companies that don't know us, sometimes we get like blank stares, because are we a research company? Yes. Do we do consulting? Yes. We invest, we do innovation, we lead a network. Like, it's very confusing who we are. So we thought it'd be helpful to hear ways that, a real life insurance company has actually partnered with us. So maybe you can speak a little bit to some of the ways we've worked together.
Sure, yeah. We've been partnering with you all for several years now. We've committed more than $12 million to the organization. And the slide that you showed that provided an overview of your services, I really drill it down to three, which is around data and consumer insights, business advancement, and catalyzing innovation. And we've worked with you in all three bucket areas. I'll leave the innovation to Adam, because I know he's going to talk about the Financial Solutions Lab and the way that we see innovative companies and partnerships coming together. But around consumer insights, we worked with you all 2 years ago to look at how do people utilize insurance products, how lacking is the access to it, particularly for low to moderate income individuals. And I think the fact that you bring together a network of companies, fintechs, nonprofit organizations, policymakers, it allows us a safe space to have conversations, to hear what's at the cutting edge, to hear some of the trends that are happening for either service providers or employees at companies, and really being able to have that area to network with each other and to garner better consumer insights is incredibly valuable for us. I think the other ways is that, we are working with a team within your organization to help us modify one of our financial education programs. We have an internal program called Prudential Pathways that is largely geared to a certain population of our clients. And so we'd like to think about a Pru Pathways program 2.0 that's really addressing the needs of the mass market, so low to moderate income individuals. And so we've enlisted in your advisory services to be able to help us think through what is relevant for this population, what is not, how do we make it more engaging, and really creating not to get rid of our 1.0, because that's still a stable, but creating a 2.0 version to really help us better educate people on some of the challenges and the stresses that come around building financial security. And then I'll also say we've utilized your organization to help inform our employees better around consumer insights of kind of crossing between the consumer insights and business advancement. Several years ago, we had your organization come in and do basically a SimCity type of experience where we had our senior executive leaders, product developers, researchers go out into the streets of Newark, New Jersey and be able to cash a check without a checking account, being able to wire somebody money, just to give them that real life experience of what does it mean to, not have stable credit, not having the resources of banking and savings products that we all normally do. And so really thinking through that whole experience as well, and having been informed by what are they learning on the ground, because you learn best when you're actually experiencing yourself. And then on the financial solutions side, Financial Solutions Lab side that Adam will talk about, is really thinking about what are the new and innovative ideas that are happening in the fintech space, and what are some of the partnerships that are happening between fintech and nonprofit organizations, because we do support a number of organizations in the financial inclusion space. And so how do we expand and scale some of the successful products and services?
Excellent. Great. We have a couple of questions that have come in. I'm going to move to Max first and chat with him, and then hopefully we'll have time to loop back around to answer some of these questions. So if I can introduce Maximilian Weiner is from Resilience. Oh, you have your nice background. Very nice.
Yes, I do.
So Max, can you just introduce yourself, your company, and then we'll take the conversation from there.
Sure. Hello, everybody. So my name is Maximilian Weiner. I am the CEO of Resilient. We're a New York-based fintech, also Insuretech, really within the inclusive insurance space. We are particularly interested in financial health. I think at a macro level, I think it fits within a context of sustainability in the broad sense. So if you look at the UN's ESGs and the 15 things to focus, financial inclusion is in there because structurally, financial health with regard to the sustainability of existing systems is important, right? And that as we see these massive spreads between the financially very well off and those who are not so well off, those create, instabilities within massive political systems. So from a macro perspective, financial health is interesting from that perspective. I think that at a more sort of from a more hands-on perspective, what we see is that there is actually a lot of work being done in, I would say, the innovation space around financial health. A lot of fintechs who are massively successful are really looking at what traditionally was called the underbanked or the underserved, and developing some really interesting solutions around credit and savings. And whilst I think we'd be the first to agree that that's essential, our view is that in the presence of shock, and particularly catastrophic shock, for those who are financially vulnerable, it doesn't really matter what you do with regard to those two problems or those two solutions, shall we say, to those problems. They are not designed for shock, so they will never be adequate or appropriate. Credit really should be taken in the ideal world to build an asset base and to augment. Savings, obviously, to protect on the back end. The only product that is designed for shock specifically is insurance, right? So you take a situation like COVID, 6 months in, for this population, so the 140 or so million people we're talking about, who we would call financially vulnerable, in the absence of insurance, it's a major structural problem if you're looking at financial health holistically, which is, of course, why Financial Health Network includes it in their overall score. So I think that's just some background. For us specifically, in terms of how we think about this, we have a fairly unique approach. We like to talk about the misalignment of supply and demand. So our research shows huge demand in low and moderate income families or for insurance. Affordability, access, product complexity, loss aversion, various things get in the way of people actually buying it. On the supply side, insurers, so funnily enough to Sarah's point, in the days when life insurance was being sold at 5 cents, what was probably happening was that there was a broker or somebody knocking on the door on Friday night saying, hey, it's payday. Do you want to pay your premium? That is gone, right? And in fact, most of the insurers, as they demutualized in the sort of late 60s, early 70s and moved into the mass affluent markets, that component of their retail distribution has actually gone. And so they are actually just physically unable to serve that population in that way. And it's very, very difficult, obviously, to incent a broker to sell small face amount policies, which is what we're essentially talking about, which is why we talk about micro or inclusive insurance products structurally. And so in the absence of that distribution, you end up with, frankly, products which are expensive. There are biases around anti-selection from insurers around these populations, particularly on a single or on an individual basis. The assumption is you're buying $20,000 or $25,000 of life insurance, you're going to die. They perceive that population to not be persistent, so they price that. So you get essentially this split between value and cost, and the whole thing just breaks down. And so we have taken a kind of strange approach, which is to say, well, okay, so if insurers don't distribute these products to people who need insurance, who else serves this customer, right? And in the United States and in developed markets, you'll find that most of these individuals are actually engaged in some form of commercial relationship with a whole series of different services. So it could be 84 million prepaid phone users in the banking sector, in the transport sector, in the independent contractor sector. And so what we've developed is a model whereby what we do is we go to those companies and say, look, To the extent that your primary focus on a day-to-day basis is around, okay, how are you retaining these customers? How are you engaging these customers? How are you acquiring new customers within your fairly commoditized product set? Why don't we bundle, in our case, to start with life insurance, and we can talk about that if you would like to. Small face amounts of life insurance, $3,000, $5,000, $10,000, in return for your existing customers or new customers engaging in the types of behaviors that actually drive your business. So renew your prepaid phone plan, top up your prepaid credit card, drive more shifts for this yellow cab company or Uber, and in return get rewarded with insurance. And so that's been our starting point. So it's at no cost to the consumer to create scale, a digital relationship, data, and then hopefully in the long term build what we would call a value-based insurance relationship where we can sell other appropriate and relevant and affordable insurance products where we stripped out all that inefficiency and created intuitive and transparent products.
Great.
Sorry, that was a bit of a
Yeah,
mouthful.
I mean, what I love about your company is that you really are trying to be innovative and how to find ways to get insurance into the hands of the most vulnerable, where it's somehow subsidized by someone else that sees that as an interest for their own business. And so you've been very innovative in the various ways that you're doing that, and you've articulated well some of the challenges of really serving those that are un or underinsured in a way that's still profitable. And you also touched on something that we talk about a lot at the Financial Health Network, is that there's lots of tools in someone's financial toolkit. There's savings, there's credit, there's insurance, there's others, but I'll just talk about those three. But there's a lot of confusion among consumers that we've seen about when each tool is appropriate and in their best interest to use. And so I think really talking more about when insurance really is the tool that is most appropriate for a certain shock instead of pulling from savings or going to high cost credit is a really important conversation to have. I want to just ask you one more question before we then maybe go to some of the questions that have come in. And if anyone has additional questions for Sarah or Max, please do put it in the chat. I see a couple in there. But can you talk a little bit just about ways that we've worked together and the ways that we've learned a lot from you and your business and the different ways that specifically you're trying to serve lower income populations. But if you can just speak a little bit to that, that'd be helpful.
Yeah, I mean, again, to echo some of what Sarah says, obviously at a much smaller scale, we're not running Prudential over here, but I think what's super interesting about the Financial Health Network is really this sort of somewhat peculiar, until you really understand how it all fits together, combination of capabilities and skills. There are quite a few institutions in certainly the thought leadership space who are doing some of this work or all this work, or I mean, however you want to see it. But the point is that's all that they're doing, right? So it remains relatively theoretical and does not therefore transition into an applied framework. It doesn't translate necessarily into outreach and education with corporate partners who are then implementing stuff and being sensitized to these concepts and ideas, which for a startup like ourselves in the Insuretech space, that by definition, that network which you create is also incredibly powerful, because it means that we're able to engage with people who are thinking, if not the same way as us, are thinking about these types of problems. And that creates a lot of fertile interchange. So it's very intellectually rich, but in an applied context rather than just being academic. And we spend a lot of time in the academic universe as well. When we think about the impact of insurance, because we're an impact-centric enterprise, and how it impacts ex post and ex ante, and how you start thinking about peace of mind in terms of product. This is all very academic. Yours is much more applied, and then to your point, there is the lab at the back end of that is then actually going out and putting money where its mouth is, and pushing and financing innovation in and around these spaces. So it's a super interesting set of and subset of resources for anybody, I would say.
Great. Yeah, that's really helpful. There's one question in particular that I want to visit from the chat, and then those that have put other questions in there that we don't have time to ask now, we'll definitely be able to follow up afterwards. But there's a question for you, Sarah, that came in asking specifically around how Prudential has seen any advances in messaging life insurance as a strategy, wealth transfer strategy for underserved communities, especially Black, Indigenous, and other people of color. Can you speak to that a little bit? It's a very timely question. It's a great one. And just wondering how you at Prudential have been thinking about that.
Yeah, it's a great question. And I think that's exactly where we're heading. I would say that has not been a focal point for the company for a while, but we've just recently, even pre-COVID-19, we're thinking about how do we make sure that our products are relevant for communities of color, specifically Black and Latinx communities? How do we make sure that the marketing around these products are exactly what you're talking about in terms of wealth transfer and helping communities understand why these products are so important? And so we've actually just hired somebody to lead our Black consumer engagement strategy, which is fantastic. We now have a senior leader who's going to lead all of that effort. And really, and it's great that we're also at the table too to help think about how do you make your products more inclusive? How do you ensure that the marketing has the right messaging and it's culturally relevant? And so I think it's 100% in the right direction. I would say that we are not there yet, but we are getting there, and we're putting that strategy together to hopefully launch early next year.
Yeah, great.
Could I just add to that very quickly?
Sure,
So we do
yes,
a lot
please.
of research around values, beliefs, and perceptions on insurance, so quantitative and qualitative. We are always completely shocked by how high up life insurance ranks as being the product that's most desirable. There are lots of different reasons for that. But I think one of those, obviously it's a product a surprising amount of comprehension around that product. The average funeral cost in the United States is $7,800, right? So on that metric, mortality costs almost $9 billion a year to this population. And it's intergenerational debt, right? And there is high demand. We would argue it's biased. The desire doesn't actually match the need. But again, it's a massively underserved population. There is a clear understanding that this is something that they should have. And as I said, they don't know where to get it. They don't know where they can't afford it, and they don't necessarily understand it, and nobody's selling it to them. So yeah, there's clearly a need and there's demand for it.
Yeah, you've done some really interesting research showing that people's desire for life insurance is very high, and as like an added benefit for usage of other services and products. Great. Well, thank you to both Sarah and Max. Our time is going quickly, but I think it was helpful just to hear from some of the partners that we've worked with. And so in the last 5 minutes, I just want to share a few resources that I want you to be aware of. And we have one last poll at the end, so stick around to the very end. We're interested in some of your thoughts and takeaways. But the first one is just around, and you can go to, there we go. So I mentioned the Financial Solutions Lab. Our next challenge will be launching in just a couple weeks. So I wanted to invite Adam, our colleague from the Financial Health Network who runs the accelerator, to just talk briefly about this next challenge.
Thanks, Sarah. So my name is Adam Hartman. I'm the director of the Financial Solutions Labs Accelerator at the Financial Health Network. Just a bit of background is noted here. The Financial Solutions Lab is a $60 million 10-year initiative managed by the Financial Health Network in collaboration with both our founding partner, JP Morgan Chase, and with support from Prudential Financial. The lab's mission is to cultivate, support, and scale innovative ideas that advance the financial health of low to moderate income and historically underserved communities in the United States. The lab has 3 flagship programs: the Accelerator, which focuses on scaling promising early stage fintech companies through an 8-month program providing participants investment as well as strategic and technical support; and the Nonprofit FinTech Exchange, which is a program that seeds partnerships between nonprofits and fintechs. The Collaborative is also our 3rd program. It's a forum for stakeholders to ideate on solutions to unmet challenges. Every year, the lab launches a challenge focused on pressing financial health needs in the United States. As Sarah mentioned, this year's Accelerator program, our 7th, will have a focus on building financial resilience and growth. As Sarah noted, most people in the United States, find themselves financially vulnerable or just financially coping. Many consumers struggle with emergency expenses and income volatility, and with building long-term financial security, especially in the wake of the pandemic. So we believe that innovative and fintech and insurance solutions are key to addressing these systemic barriers. And we're looking to identify and partner with such organizations in our next accelerator program. As noted, we'll be officially launching the challenge and open applications on the 27th. We'll certainly have more information regarding the challenge on our website then, but just wanted to, let everybody here get a sense of, what we're planning for the upcoming year. And in the meantime, if you'd like to learn more about the Financial Solutions Lab or our upcoming Accelerator Challenge, please don't hesitate to follow up with Sarah Parker. So thanks. Appreciate it, Sarah.
Great. Thank you, Adam. Thanks. So yeah, be on the lookout for that launch in a couple of weeks. So just these next few slides, we can just kind of breeze through, but I did want you to know about the research that we have done. We alluded to this work we did with Prudential a couple of years ago, looking at specifically among low and moderate income Americans, how they view and use insurance. We also, you can go to the next one, broke it down by various insurance types, the various lines of insurance that we looked at. The next slide is a study that we did specifically on Insuretech for financial health and looking at the Insuretech industry from the angle of financial health. That's also a report that's available. The next slide is the Financial Health Pulse. This is what I mentioned earlier, and just more information around where you can access that. And we can share these slides. Some of them, as you can see, have the hyperlinks. So we can share the slides with you all afterwards. These are some key links, just some research pages, landing pages around our insurance research and other thoughts and resources we have on insurance and financial health. And then finally, I just want to mention a couple of upcoming events that may be of use to you. So actually later this week, starting tomorrow and the day after, we are having Emerge Insights, which is an online conference where we're diving into the recent results from the Pulse and also hearing from some of the companies in our network who have been actively measuring and sharing some of their insights from that. This is free and open to the public, so feel free to join us if you're available. And then also we have a public webinar specifically on the findings from the 2020 Pulse results on November 17th. So again, the link is there. Feel free to join us for that public webinar if you're available in about a month. So if you want to, I think we'll go to the poll to close this out. We want to thank you all for joining us today. We hope it was interesting. You learned something new. You had access to some new research and data. And to close this out, we'd love to do a final poll with some of your takeaways. So how would you characterize your thoughts on financial wellness, financial health? And you can see some of the options there. It's not a buzzword. I'm intrigued, but need to understand more. Interesting, but time will tell, or just a lot of hype, or maybe not sure. So love for you to share your thoughts openly, and we'll leave that open for a couple more seconds before we close it out. All right, good. So we have a lot of allies on our call. Great. I'm glad that over almost 75% of you think that it's an important customer expectation, key to business success. And we'd love to share more of our work with you to continue this conversation. So please do reach out. We will be sending the deck around to those of you that attended. If you have other questions, if you're intrigued, if you're not sure, if you just want to discuss more, we're happy to talk. So thanks so much for your time today, for joining us, and we wish you a great afternoon.